What is up, guys? Today is a trade recap of 8/6/24, and honestly, the trades today were beautiful, very clean trades overall. And we'll start out with marking. We'll do the top-down analysis I did this morning. So going into the morning, we were inside this weekly gap. We'll mark it out as a weekly gap, weekly opening gap, which is a very which is acting as my high time frame PD ray. So this is our higher time frame PD ray. Zoom into the 4-hour. Can see that we came up. You can see the real weekly opening gaps like this area kinda. You see that. You also see that you are getting sell-off pressure to the downside. You have clear selling pressure in the market. You got on a 15-minute. You start to look at this and you see this right here. So you have your clear level inside of it. You have internal swept. Call that the stop raid. You have clear displacement down on the 15-minute. You get higher time frame PD rays are getting stop. Hey, stop. Sorry, my dog chewing my book bag. You have higher time frame PD rays getting respected, constantly selling off. My draw, higher time frame draws right here, but this isn't the internal draw, so we're gonna go to the internal draw. The internal draw is this low, and why is that? Is because it is a generated low. Now you see we're continuing to sell off, and all this whole way down, we're continuing to respect bullish or bearish things. Like every time there's an imbalance created, it's respected. So you need to pay attention to that. So now, and this also, if you look at the standard deviation, I think it was here to here. It aligns very good, and I think this also goes back to discount almost. Yeah, this move right here takes us back to discount before continuing lower. So you have all these things lined up together, and you're very bearish. So overall, it looks like we're not going to complete this model, but it doesn't matter. Overall, you have this right here. So like this is your higher time frame buy side, sell side of the curve, buy side of the curve. And then this is your very internal model right here, and I'll show you. So just hanging out the bottom, around the blood. So overall, you have higher time frame soup. As you can see, this high gets taken, and we continue to sell off. We've constantly come down, respected higher time frame periods, respected higher time frame periods, sell off again, respect higher time frame, sell off again, respect higher time frame. It's a constant pattern. You got to look for what's being respected and disrespected. Also, look at this, sell off, respected this, sell off again. So you have this overall model. You're looking at this right here. This is your internal range right here. So what you see here is a clean market maker sell model. Why is that? What do we have here? Well, overall, on the higher time frame, we have that weekly opening gap that's being respected this whole time. We have selling off continuously, putting in a new low, generating liquidity at that 2 to 2.5 level. The rebalance comes back to equilibrium of this entire leg. As you can see, it makes it back. It's higher than that, but it does tap it back there. You have can act as your sell side or your buy side level that you need to have. This is your higher time frame imbalance. We're on the 5-minute. Zoom into the 1-minute. Let's look at it. You see you get clear market structure shift here. Clean manipulation of these highs here and these highs here. You have your clear manipulation. You draw out your standard deviation. What does your standard deviation line up with? The sell side we are already targeting that is already our internal draw. So we have all these things lined up. This is all low resistance liquidity right here. These are all generated lows. So you have this model right here. And when I get on the charts around 8:30, I'm looking at this. I'm like, okay, we came down, came back up, respected. It sold back off. It's this right here is the same thing as this right here. Sell off, come back, rebalance, sell off again. Sell off, come back, rebalance, sell off again. Okay, so now you know my overall bias is very bearish. So I'm watching. There's two trades I took. The first one was break even, and the second one was a win with stoppage at break even. We'll talk about that. So the first one came when this 5-minute imbalance was right here. It was a pre-market. It was right at the 850 macro. So I have this 5-minute imbalance, and I'm watching these 1-minute highs inside of it. Now I'm looking, this is soup. We get these highs, and we get a clean rejection. This rejection was very clean in my opinion. As you see, we get this. So I enter like here. I know, honey. something like this. I'm targeting these two lows. This is my overall draw. This is the internal draw of the internal, if that makes sense to you. So this is the low hanging fruit. So we get movement right away, but then we start to come up, and at that same time is when the next 15-minute candle is opening, and the next 15-minute candle is opening right here, creating a big imbalance. So what do? I handle my position very well. I'm barely, like, I'm like almost at break even, but I didn't have my stops at break even. But right when that 15-minute imbalance opens, I close my position. So I lost like maybe 40 bucks, which is nothing, basically break even. Why? Because I thought this was 5-minute turtle soup, when in reality it was 15-minute turtle soup. So now this is a 15-minute fair value gap aligned with 5-minute highs inside of that. So now you have a higher time frame soup. So higher time frame holds higher power. No, leave this chord alone. Higher time frame holds higher power. That's why I leave this and say, okay, I still have the same bias. I'm still very confident we're going to go lower. I just know I have to wait for a little more. So I zoom in. What is this right here? Can you tell me? It's AMD, accumulation, manipulation, distribution. It's clean AMD. Aligned. The AMD aligns with our already bias of going lower. Hey, leave that alone. She just wants to chew everything. So what do? So we have this 15-minute imbalance, and I'm watching here. I've already closed this at break even. I still think the draw is lower. I see this move. I don't like it because I forget why I didn't take this. I just didn't like how he poked above and then sold back off right before market open. And market open is going to bring market manipulation. It's what happens every single day. If you go check at 9:30 every day, there is volume. Volume comes into the market once it opens. And if you have the correct draw on liquidity, it's going to move the opposite way. For example, the draw on liquidity is lower, so market moves higher. So right at market open, it pumps. Right here, it pumps and creates this top wick. Now you think, oh my gosh, you can't take sells. You can't take sells. We're going to disrespect this 15-minute. Well, what do? I zoom in. I see this is the top wick. We're starting to sell off. You can look on the 15-minute at this time and notice that the 15-minute is starting to wick down. So what do? I use what the market is giving me. I'm observing. The market is telling me that it wants to go down. It just came up here to rebalance. What is that rebalance? That rebalance takes us all the way to equilibrium of this leg. Where does this touch? Like, come on, guys. So after that, I just need something real quick to confirm. What is my real quick confirm? Closure of inverse. When the 15-minute is already wicking down, showing that it's going to respect the 15-minute fair value gap, and on the 1-minute time frame, we are closing below a bullish fair value gap. What does that tell you? That tells you that price is going to go down. It tells you that your draw is correct. Aligning those two together, I enter. Now, this is where I didn't get the best fill. I got my fill like, it would have been right like here. It's like 79.80. This was my fill. Stops were here, and I was targeting this. So what happens? Price launches straight down. Why? Because we're aligning all these things together. When you have external aligned with internal, aligned with different setups, aligned with time, aligned with respecting and disrespecting, you get clean and efficient moves. The clean and efficient moves happens. Now what happens to me? So we get this move down. I take off like 25% here because I'm like, okay, we're almost there. I still don't understand. Not that I don't understand, but I wanted price to sell straight off to this level. So when we get this move down here, I move my stops to break even. Now, because I had a bad fill, my break even was top wick. What was top wick? Top wick was also equilibrium of this move. So there's two things. It's going to be age trying to do that. There's two things I could learn here. This is a learning point for me, a lesson. So we get the sell off, I go stops to break even, which isn't a problem. Now I necessarily should have put my stops maybe at this high or this high. Because I had my stops at break even, I get wicked out, so I only secure a little bit of profits and not the full position, because then we come back to equilibrium, rebalance, and then hit the draw liquidity. The exact level I thought, the 2 to 2.5, and then we're rallying up. So therefore, I secured some profits down here, like 25% of my position, and then I got stopped at a break even, which is, it's not the end of the world. Like, it's overall a successful draw on liquidity. It's about building the good habits. It's about having conviction. It's about being confident in taking the trades. It's about understanding how the market works. And here I nailed it to the T. The only problem is I moved my stop loss too tight. Now, what am I going to do now? Next time there's a high right here, I'll just put it there, because what is the difference between a $0 loss, a break even, true break even, and a $10 loss or a $20 loss when you're on a certain size account? That number is a minimal micro percent. So it is the same thing, and you might as well protect yourself. Protect yourself. Also, This 1 minute never gets disrespected. Then we sell straight off. Very clean trade overall. This is some of the best action I've seen. If you can't identify this here, you gotta go back and re-look at this, because this is the most clean thing you'll see in a while. First stage of distribution, rebalance. Second stage of distribution, rebalance, accumulate. Third stage of distribution, the final stage before the model is complete. This model is very clean, and it's just so clean, and you gotta be able to see how clean this is. Like, oh, this is some of the best action. This is the most confident I've been in a while in a market, because this is the most clean thing I've seen in ages. Truly think that. If you guys want to join my Discord, the link is in description. It's worth it. It's $5 a month, but you get free one-on-one meeting. I live trade every single day. Live took these trades. Also ask questions anytime, and I will answer. Schedule meetings, stuff like that. Also, if you enjoyed this video, please like and subscribe. I appreciate all the support. You guys have a great Tuesday. Thank you.